here we are. We've had overviews this morning. We've had a good look at housing supply and policy constraints. We've had a look at some market factors. In terms of commercial property, what are you seeing that's different? In other words, this is a huge level from Connell this morning right through, a lot of uncertainty. Just when you go out of the frying pan of the pandemic, you go into the Putin fire, bull to bear market, financial markets, it's over the era of low interest rates we've heard this morning. You throw in Brexit and so on. So in this swirling confluence, what are you looking at for commercial property, Carol?
That's a big question. It's a big topic.
That's why you're paid the big bucks, yes.
Well, do you know what? I'm going to leave the interest rate side of that and the market conversation to my esteemed panelists here. But I suppose some of the big shifts that I'm most excited about, look, ESG, and I know we've a big topic on this in a panel this afternoon, but really its importance can't be overstated. Certainly in terms of when we're talking about commercial space, really the focus on wellness is huge. It's something we haven't seen before. So I mean, by the latest stats, it looks like 2022 globally is on track to deliver a $200 billion real estate wellness industry. This is something that 10 years ago was just a conversation. So the trends there are just too big to be ignored, and they're absolutely underpinned by technology. And obviously anybody who is familiar with my overuse of social media will be well used to prop tech. I've been banging that drum for a while, but the reality is it's like everything. If you say the same thing often enough, you'll be right at some point. Thankfully, we're at that point. It's now prop tech, construction technology, its time has come. And the reality is this was always going to happen. Real estate is everything. It touches everything, every economic activity. Look at the building that we're in today. I'd love to be able to give the contractor a shout out that delivered this. The reality is real estate is everything that we do, and technology underpins that. So in terms of the commercial property conversation, we need to move the conversation on from the economics of physical space and talk about the economics of service and space as service, because that's what the industry wants.
Okay, so I understand technology in terms of BIM and modular construction of housing and all sorts of 3D changes, Internet of Things, AI and that. I just don't understand this wellness, 2 billions. Is that gyms or what is it? Well, now, just explain it to me.
No, actually in terms of wellness for real estate, and I'm quite sure there'll be more experts in the room here, but in terms of wellness for real estate, this is such an emerging topic, and it can range from anything from your indoor air quality, indoor acoustics. The reality is, one of the stats I came across recently that blew my mind is that globally we have 1 billion information workers. So for the first time in history, work is more likely to be done in an office that might not look like an office. What offices look like in the future is changing, but the reality is, in a world of increasing urbanization and density, working from home is not likely to be the option. We just don't know what the middle ground is. The reality is, though, 1 billion information workers on the planet need somewhere to work that will inspire them. They need to be working at their optimum productivity. We know that acoustics, air quality...
Now you're losing me completely. These snowflakes want water coolers and plants and everything in the office, right? Is that what you're actually saying? It's the design of workplaces are to cater for these generation...
actually the design is a
who
really
actually want to work from
stage.
home and watch Netflix anyway, but carry on, yeah.
Who's going to make those Netflix documentaries for you?
Okay.
Our snowflakes.
Yeah.
No, we love all of our employees of all ages. But the reality is, wellness is not a trend that is just a blip or keeping people happy.
Is it a design trend? Is that your point?
Actually, I think a design trend is the most exciting space, because if you can imagine how a space can increase the productivity, at the end of the day, look, it's become a bit of a cliche to say, people don't want to buy, you know, they don't want to buy a hammer and a nail, they want to be able to hang up a picture. And that's kind of the reality. People don't want an office, they want a happy workforce.
So what I'm
And we want
taking
a
from
happy,
you
healthy workforce.
is this whole Industrial Revolution 4.0, the technical revolution, is really affecting the built environment, real estate planning going forward, and you need to get with the program. Is that what you're saying?
It is the programme.
Okay. The world as you see it, Suzie.
So I suppose in terms of the uncertainty that you've mentioned there, I think from my perspective, and you touched on the fact I manage a pension fund, so probably slightly more risk averse maybe than some other real estate investors. So from my perspective, the key at the moment, amongst all of the uncertainty, is probably income resilience. So having really good quality income, so making sure you have the best quality covenants that you can possibly have in your assets, and therefore when the next, God forbid, pandemic, downturn, whatever it might be, comes, your income is protected. So I suppose at the moment, they touched on it on an earlier panel, that, you know, we're seeing yields shifting out now, and therefore capital values coming down. And obviously capital values and, you know, capital returns and income returns are the two key components of total returns in real estate. So at least if you can look after that income return piece and make sure it's good quality, and therefore your rent collection is as high as possible, I think that's key. And I would echo then what Carol said in terms of sustainability. I suppose we talk about ESG a lot, and the E part, or environment, it gets a lot of airtime. It is something we are very, very conscious of, and it's something we strive to achieve amongst the portfolio. The other piece that we're really focusing on in recent years is the social element. So while it might be commercial property, and typically maybe social might be associated with residential, we do what we can to use our real estate for the greater good of the communities. So, you know, we've worked with a lot of initiatives recently, like Champion Green, like with the Ukrainian Irish Centre there recently. We've worked with St. Vincent de Paul. We're currently in negotiations and coming on to repurposing a little bit about maybe providing one of our office floors that's vacant at the moment because it's subject to planning for something else, maybe using that for an autism play centre. So again, just trying to do what we can with the real estate that we have for the greater good of the community as well as everything else. So they're probably, you know, two things between ESG and income resilience are two key things that we're focusing on in this time of uncertainty, as you say.
But if I was a trustee, I would be saying, Suzie, stick to the knitting. I want you to have a flagship investment product that will beat the rest of the market. So we love all the other stuff you're doing, but just tell us, where are the sweet spots that you're looking at for 2023 for return on investment? And I'll give you, you know, retail parks, industrial parks, city centre office blocks, Grafton Street, or, you know, apartment blocks. What do you like? And where do you like it?
Absolutely. Well, just to be clear, the knitting is looking after itself. So we have, you know, we're obviously looking after the best interest of the policyholders on the day-to-day basis anyway. And it is about making good investment decisions. So again, two things that we're focusing on is we are actually in a good position at the moment because the fund has quite a bit of cash. So we are in an acquisition phase at the moment, which, you know, is a good place to be in at the moment because we are.
So you see value if there's a downturn?
Yeah, we're seeing a bit of value at the moment, more so because probably there's less competition in the market in terms of those buying properties at the moment, because for obvious reasons, those that are debt backed are kind of waiting on the sidelines at the moment, so it is an opportunity for cash buyers.
But it could go lower.
Pardon me?
It could go lower.
Absolutely. I'm sorry. Don't get me wrong. I'm all for the low ball offers, to be quite honest. So I'm not, you know, I'm keen to not overpay again for the best interest of the policyholders. But no, there is absolutely some good value to be had at the moment. Don't get me wrong. I don't think we're going to go back to anywhere near the levels we went in the last downturn. I don't think this is anything like that. I think both personal and corporate balance sheets are much stronger, much more resilient than they were last time round, which is critical. But
the last time we heard all this soft landing stuff before, it's what the market people always say.
Yeah, but I do think obviously over the last 10 or 12 years, balance sheets have been right-sized. I'm putting on my old hat now. I'm an ex-auditor back in the day, so I do think balance sheets are much stronger than they were before. But to come back to your question, I suppose, where would I like to spend money? You touched on retail parks, and I know I've got the retail expert here to my right, but retail parks is really interesting. To be honest, personally, I probably won't buy more because I already have a good few, but it's been a really interesting subsector of retail over the last couple of years. It's been very resilient. We learned a new phrase during COVID of essential retail, and actually the retail parks stayed open for most of COVID because they were essential providers.
This would be the Harvey Norman type of...
So exactly. You're slightly out of town, but it meant they were your Harvey Norman, so electrical goods could stay open, pet food shops could stay open, all those kind of things could stay open. And also because we were all stuck in our houses, people were spending money on their houses. So your carpet shops, your furniture shops were all trading really well. So actually retail parks is a really interesting one. But in terms of where I'm spending money, I mean, industrial is another one you've mentioned. Industrial is something I would like to increase the industrial exposure I have in my portfolio, but I think it's too expensive at the moment.
Do you mean that for manufacturing, or do you mean it for warehousing and robotics?
Well, sorry, so for me, I suppose I've been looking at kind of logistics and distribution assets.
Yeah.
I think there has been obviously a huge increase in demand in that space, both as a result of Brexit and companies looking for in-country locations in Ireland, but also then COVID, more online shopping, that kind of thing. But I actually think there's been so much occupier demand, and as a result, a lot of investor demand. I think yields have gotten crazy. They're way too low in that space. Rental levels are also getting pretty high. They'll get to a level pretty soon, I think, that'll be unsustainable for the occupiers. So it's a space I would like more industrial, but at the moment I think it's a bit expensive. So for me, it's very much an asset-by-asset approach, and it is about buying an asset that has a good quality covenant in place and either is currently sustainable or has a sustainability angle that we can unlock. So like in-house in Aviva, we have a very strong team of chartered surveyors and quantity surveyors. So we're always looking to add value. So if we can do it ourselves, we'll roll up the sleeves and do that. And then I suppose the other place I'd look to spend money is actually on my standing stock. So we have 63 properties in the fund, and we are currently going through, I suppose, a reinvigoration of those and making sure they're all as sustainable as possible. Somebody mentioned something interesting earlier. The fund that I manage has been around since 1982. So some of the assets have been in there since the 80s, so they're not going to be grade A.
So retrofit is a sweet spot.
Retrofit, but you're never going to get them up to the A rated. Some of them are protected structures, so there's all the regulation, fire access points. I know Vince will touch on repurposing, I'm sure, in a minute. It's that's something that we're really keen on, and repurposing assets and unlocking those upper floors in the city centre buildings above shops. So that's something that we've got a project on site on at the moment. So spending money in our standing stock is also very important.
Neil, welcome. You maintain that the retail high street is not dying, dead. You sound like a fax machine salesman, surely.
I'm not selling buggy whips, Ivan. Well, I'll give you an example. We've done more deals. I've done more deals in Grafton Street this year than I did in the last 10 years. Because COVID and Brexit and a number of other factors have contributed to a lot of vacancy arriving in the street, but there's been a massive upgrade. Like what we've lost, there's been a long-term trend that was sort of accelerated through what's happened over the last 18 months, which is are weaning ourselves off UK retailers. So if you look at the people who have failed, Topshop, Topman, Coast, Oasis, Monsoon, Debenhams, they're all UK failures that manifest themselves in vacancy in the Irish market. And on Grafton Street, they've been replaced by Canada Goose, Lululemon, Lego, Penhaligon's, Mont Blanc, Russell Bromley, some really nice brands, an upgrade, if you like, in terms of where we've gone. Like we have very little standing vacancy on Grafton Street now because it's been fun doing the deals. But I don't
and has rental levels been maintained or at a discount? Rental
levels are back to where they were just pre-COVID, sort of that sort of level. Like rental levels, it's interesting when you look at what's happened in the retail sector since the recovery, which recession, the big one, the GFC. We entered the GFC with an Irish consumer who was one of the most indebted in the world, 200% of disposable income in terms of debt. We spent the last 10 years paying off that debt. We're 68 billion less in debt now than we were in 2011, and according to the CSO and Central Bank, we have 200 billion more financial assets than we had then. I think the net household worth's gone up from 420 something billion to 1 trillion now. So the Irish consumer is in a vastly healthy position compared to where they were in 2008 and 9. And what's happened during that process is that's money that's been used, 20 billion a year or so in recent years, that's been sucked out of the economy, hasn't been going to retail. At some point in time, that starts to return back into the shops. And that's what retailers are seeing, and that's what our investors are seeing. So we've got this combined impact of the UK retailers leaving, more interest in retailing coming in, the health and wealth of the Irish consumer.
But the elephant in the room, I don't know if you saw last weekend, whether it was Cyber, Friday, Saturday, Sunday, Monday, the whole situation of a generation is towards purchasing online. They're just not going to shops anymore.
It's a reality, Ivan, that's a false narrative, and I'll give you some real examples to back that up, but there is this idea that it's online versus bricks and mortar. The CSO figures indicate that 4.8% of Irish retailing takes place online. That means 95% of it takes place in store. Now we take cars and motors out of that because you can't really buy those online. You probably can, Tesla. But
and take grocery out of it as well.
Well, no, because grocery, and if you look at the...
Like what percentage of clothing is now online?
It's in the low double digits, 12, 13%.
Okay.
So it's still 80-odd% store. And I'll give
Okay.
you a real example. There was a centre we managed in the Midlands, fashion retailer in there last Friday did the highest turnover they've ever done in that store. And they opened in 2007 when we were all crazy. So that's in-store sales taking place in the store that I got the turnover numbers from last Friday. So Black Friday has been very good for physical retailing. People get it, and retail parks. Black Friday is phenomenally strong for retail parks. I did a tour with investors on Monday. We went into 4 retail parks and one of the shopping centres, and one of the M50 centres that they own. And his comment to me was, does no one in Ireland work? Because everywhere we went, car parks were full.
I constantly ask that question. What you're saying is there's a blended thing. The people with the best online offering are the people with the best stores and vice versa. Is that?
It's an omni-channel world. The reality is that online's big opportunity was lockdown, right? So I've been told for years, I'm going to conferences, I've been told we're all going to sit at home with our goggles on and we're never going to go shop for, it's an unending, just wait for it to happen. You haven't caught up with it yet because Ireland, we're apparently behind the curve in technology is what the international investors were telling us. The reality is lockdown happened. We all got to know Dave from DPD. He became one of the family members after a while. But as soon as the shops reopened, they were queuing down the streets to get into pennies. They all rushed back in. And I have, as you say, we have 25% of Ireland's retail stock under management. So there's 100 million visits to our centres every year.
But this sense of, I'm going to go to Waterford on Saturday for this experience, and that retailing has become a destination experience. Can you give me some examples that vindicate that? Because I'm just wondering, there's only so many cups of coffee you can have,
Yeah, we used to have the cups of coffee, and even I can't get my haircut online was the joke we used to make in investor meetings. But there is retailers, and this is where you'll see the failure of retailers. And it's not about retail failing; it's about retailers failing who don't adapt to experiential models. And if anyone who was in, I can say bad things about Debenhams now because they're no longer a tenant. They were unexciting stores to go to. So they were a rack of clothing that was not experiential. You go into a lifestyle sports store now, you can kick the football through the goal, you can try on the runners, get on a treadmill, see if they work for you, they do gait analysis. It's about, you can do your click and collect and it'll be waiting for you in store. And if I'm a retailer, I don't really care whether you buy online or in store, I just care that you buy. So everything is met in the middle in an omni-channel. And one of the good examples I give you is, someone mentioned shares earlier on. Amazon shares are down 40% this year. Next shares are doubled. Because Next are a classic example of an omni-channel retailer. They work very well seamlessly between the click and collect. I buy online, you deliver it to me at home, doesn't fit, I'll bring it in store, and now I've got you in store. So I'll get you the other size, or I'll get you something to match that. And retailers who upskill and understand that interaction and sell their brand to their customers, they'll succeed. Like Lego is a great example. We did that deal in Grafton Street, and like that, there's been queues almost every day outside Lego since it opened. But they sell on plastic bricks, right? Coloured plastic bricks. You can buy them online. It's exactly the same. It doesn't make any difference. But people want to go into the store. The kids want to go into the store. You can get your own little personalised Lego person created, and people are paying big bucks for that. Lego aren't just selling stuff in that store. They're building a brand in Ireland, which means that every kid will want Lego on the Christmas tree this year. And that's the success of using a merging of physical stores and good branding and good retailing to sell to people. So I just think we're stuck in a bricks and mortar versus online narrative, which is a false narrative, to be honest.
The only thing I can say is if Bannon never go under, you get a job selling oil to the Arabs. You're so good at selling. Right, you've been waiting patiently, Vince Harney. First of all, tell me, what is the Quantum Group and what are your plans?
Well, we're a residential developer, but we're also looking at the wider sphere, commercial market, and one of the things that we're actively looking at as well is repurposing commercial space. So the whole spectrum, nothing's not in our sight, as it were. So probably leads me on to the topic I was going to speak about, which is the repurposing of commercial properties. There are substantial amounts of lying fallow old stock in the city centres that I think, and Suzie, you probably echo this, that investors are less prone to want to invest in. The investors nowadays really want to have top-notch, certainly in offices, top-notch green credential, state-of-the-art buildings, where they've got the longevity of the income from the leases coming in. And that's really where their focus is. It does mean there's a lot of secondary and tertiary stock around that I personally think there's an opportunity to help the general housing crisis by repurposing a lot of it as residential. Certainly in the city centre, where you've got all the amenities and the transportation network, etc. There's obviously challenges with that in terms of permissions, retrofitting, the cost of retrofitting. Who's going to pay for it? Is it the developer? Is it going to be the government? So there's many challenges, but there's an opportunity to actually...
But is it not a reality with modern requirements and regulations? You'd be better to knock it down. Like some of the buildings, whether it's fire escapes, whether it's disability access, you know, the older buildings don't lend themselves to some of this repurposing, or not?
Well, there's two schools of thought on that. You could look at it from a carbon footprint as well, where actually knocking it down is increasing your carbon footprint. And the way that the IGBC are tackling things like that, saying, no, we should be making use of our existing stock and making them fit for purpose. And yes, it will come at a cost, and there'll be certain things that can't be done in them because of the nature of the build. But in some ways it's good as well, because you're preserving the integrity of what's been developed already and reinvigorating it for a new generation. And creating, I mean, I wander around Dublin too and stuff, and there's so much stuff out there that's just not being used, lying fallow, and it could add that city centre vibrancy back. You know, people actually dwelling by the shops, by the Lego superstore.
But those people who have these derelict or vacant rooms are looking at zero return. Surely this bright idea must have struck them. There are impediments, in other words.
I think the impediments are largely the cost and the retrofitting of it. And it'll be a one-off thing for them. It won't be a, what do you call it, long-term income stream. They'll have a one-off sale. So that's probably where they're looking at. If they've got a portfolio of assets, they're not particularly looking to try and reduce their income stream. They'll have a one.
Just to give you an anecdote, like if you get on the Dart and you go around Booterstown, you look at the Tara Towers Hotel, was completely flattened. You'd wonder why couldn't it? And then go about 200, 500 yards up, you see these kind of glass mausoleums there, and presumably they're completely empty since the day they've been built. I don't know if they're offices. Like, it seems to me a no-brainer there should be apartments. And I'm sure there's a lot smarter people than me who you know, why is this not happening? Surely...
Well, I think the drive is possibly some of the demographics we have anyway, that the drive is always to have an Irishman's castle is his home, you know? It's a detached house or a semi-detached house. And trying to... The young have a different attitude. They like apartment living, apartment dwelling. So I think it's getting that mindset focused that the future's the new generation, and they want to live in towns, in apartments, to all the local amenities. And that's you have to shift the mindset, I think.
And just tell me about your former life before Quantum. That was?
Well, largely in the commercial development sphere.
Yeah. And with that hat on, how do you observe that world?
I think offices, for example, I think there's going to be a big change there. I think, Suzie, you probably see this already with the way that people are impacted by COVID and the way that people are going back to work. So you'll probably find there'll be a strated office building. So what I mean by that is you'll have some with long leases, some with short leases, and some with sort of like pay-as-you-go operations. So you're catering for everybody, because I think otherwise you're missing the market. That's my office observation.
We alluded to this earlier, but people really faffed around and didn't give an answer. What is the lasting legacy of the pandemic for CRE, for the property sector?
Choice and flexibility.
Explain.
You know, today we're here to talk about the big shifts changing commercial real estate. And I suppose for people in the room, first of all, I'm very conscious that there's so much expertise in the room that I'd love to hear what you think are the shifts that are really driving changes. But I think if we come back to core terms, we need to think about how we're using space. The reality is, as humans, we spend 90% of our time indoors. We spend a chunk of that working. We're going to be working in a workplace that is yet to be defined. You're asking what the legacy of the pandemic is. Without being flippant, it's that people have really realised that they have a choice and they're going to use it. And I think Vince touched on it there when he talked about flexibility and the need to be agile. And certainly I think when Suzie mentioned the S in ESG, the social side of it, that's what's going to make people choose. The reality is there are challenges ahead, and for anybody who's been in this industry for a decade and a half, there's some familiar feelings there. And while obviously, Suzie, I absolutely hope that you're right talking about how the challenges facing us will not be anything like those we've experienced in the last decade and a half. There are a few things that are true, irrespective of the marketplace, and that is there will always be opportunities, there will always be winners and losers. So quite frankly, when we're talking about the shifts, we need to be not looking at how the pandemic changed people. We need to be looking at where those changes are going to lead us. It's a little bit like, I get in trouble for using GAA metaphors, but the reality is we need to kind of go to where the slitter is heading, and we're not doing that at the moment. We're not taking a long enough forecast looking at this.
But hold on a second, please. I mean, like, when you say the legacy is choice, the reason why it's choice is because there's 4.4% unemployment. You know what I mean? That changes. If unemployment goes to 10%, right? All your choice goes out the window. Like, it's nothing to do with the pandemic. It's the fact that there's, staff shortages everywhere. So therefore, I think, well, if you're not going to give me the option of working at home, stuff you and your job. That is a feature of economics and the market. It's not a feature of the legacy. Because I actually think the lasting legacy is actually the digitalization of our life. It took a leap forward, and it ain't going to go back. Or am I wrong about that?
I don't think you're wrong. I think if you'd said it a decade ago, you would have been right.
Without the pandemic?
Without the pandemic.
Okay,
in
okay.
fact, the
That's a fair
pandemic
point,
didn't
yeah.
introduce those. The pandemic simply
Accelerated.
And in fact, if anything, the pandemic brought the laggards that we were trying to bring for the last decade.
Okay. So do you sense, what are the certainties around the pandemic that you think have changed?
Yeah, so I would echo the flexibility piece, but probably in maybe a slightly broader way from where I'm coming from, and Vince touched on this earlier. I think landlords need to be a lot more flexible than they had to be before in many regards. So, Vince touched on the different lease durations. Like, we were so used to, a 20-year lease with a break at 15, 15-year term certain, and that's what we got used to, and that's just not the case anymore. Because I suppose tenants now are looking for more flexibility themselves. So the landlord has to be willing to do that. Now, obviously, there's always a bit of a balancing act in terms of rental levels and everything else when you're looking at shorter terms, but I think we need to be flexible in that regard. But I think two other things that I would take from the pandemic. One is actually the digitalization that you touched on. So the whole world of prop tech, and something that Neil and I were talking about earlier. If you went back to pre-pandemic times and I said, if you said to an investor, oh, here, look, I'll send you a virtual tour of that property. They'd be like, no, I'm on a plane, I'll come over and see it, and then they come over and say, oh, it's not for me. But actually, there has been a big shift in the use of things like virtual tours, drone footage, all those kind of things now that, investors, say, in Germany who are looking at properties in Ireland, they actually can now potentially rule something out without actually getting on a plane, which plays right back to your sustainability piece. So I think prop tech and to your piece around well-being earlier, I think a huge part of the well-being and the prop tech go hand in hand is, again, it's really hard now for a landlord to know who's going to be in what building on what day of the week. Okay, there's this new term, the twat days, Tuesday, Wednesday, Thursday. You're probably going to have higher occupancy, lower on a Monday and a Friday. But now at least you can see footfall counters, you can see the numbers coming through the door, and because of prop tech and digitalization, you can then adjust your energy, your heat, your cooling systems based on the number of people in the office. So I think that's something that's really ramped up. And then also obviously the virtual meetings, being able to have a meeting with somebody in London, in an hour's time rather than having to get on a plane. Like previously, I know you say 10 years ago this all started, but Certainly being in a life and pension company, it did not. Absolutely did not. So like, we only just got Microsoft Teams obviously during the pandemic. Prior to that, we were actually prohibited from having video calls. So that's been a huge shift. And the other thing then I think is the importance of the landlord-tenant relationship. That's something we pride ourselves on, but during the pandemic was hugely important. And actually, as a result of that relationship that we have with our tenants, we actually only lost one tenant, and we have quite a high retail percentage, and it was one of your UK retailers that we talked about earlier. That was on its way out anyway, if I'm honest. So I think that landlord-tenant relationship is something that probably became stronger during the pandemic and something we definitely need to keep.
So landlords now have a sense of humour when you don't pay rent, is that it? Yeah.
We don't have a sense of humour, but we look at the end game, like for example, we'd say, okay, look, we give you a bit of leniency now while you're under pressure because actually you had to pull down your shutters overnight.
Yeah.
And to Neo's point, a lot of trade does happen in the shop and not just online. So they pulled down their shutters overnight, couldn't trade, therefore had no cash flow. So I say, I'll give you a little bit of leniency now, but you give me an extra 5 years term certain. So that, you know.
Yeah.
So I think that was
Flexibility and
is
adaptability.
key, yeah.
Yeah.
I think that large parts of the property sector have shifted from need to desire. So
From need to?
to desire.
Yeah.
So I don't need to go into that store to buy the item because I go online and buy it and deliver it to my home. I don't need to go to the office to have that meeting because I can do it Teams. I can work from home. So the commercial property sector needs to reflect that the people who are going to use these buildings, which are the office workers and the consumers, have to want to go into them. They have to want to spend time in them. There have to be environments which are positive to them, which feeds exactly to what Carol's talking about. Like we've been through this on the retail sector. We've been going through because of online shopping over the last 10, 15 years. And it's almost welcome to see it arrive in the office sector because there was absolutely no reason why the office sector wasn't as set to this as the retail sector. But you've got to start thinking of the people who work in your buildings as customers. What's the pleasant experience? What's in their environment? Where are the coffee shops? Where's the place they can have a sandwich on a sunny day? Those are the things that cause people to want to go into the office, as opposed to I'm being dragged in here because unemployment is 10%. So I think there is a shift in mindset. We don't use landlords and tenants anymore in the office. It's now investors or owners and occupiers. Because we're going to get away from this idea of hierarchical relationship between landlord and tenant. You're in business together. You want the space. I have the space. How can we craft a deal that works for both parties? I think that shift, I'm welcoming it in the office sector because it'll cause people to wake up a little bit. And to Vincent's point, we database all the offices in Dublin. There's 460 office buildings in the CPD in Dublin. 400 of those were built in the last century. So and of the 60 that weren't, most of them were built in the early 2000s because we stopped building sometime around 2009 and we started again now. So most of them do not comply from a green point of view. There's going to be a big shift of musical chairs going on. All those empty office tech buildings we're talking about, they'll all get filled. All that stuff on Dawson Street that you talked about, because they're all green, they're going to get filled. What's going to be left behind is the older stock that isn't green.
One of the interesting points you made earlier was since 2011, no big retail development has been built. Do you see that changing? Do you see there's now, with the million growth in population, reconfiguration of cities and public transport, that there could be a new Dundrum built somewhere?
I think it's very unlikely in the short term, to be honest with you. I think because the economics don't stack up at the moment, where it still costs more to build those things than they're worth. So, and there's a replacement cost calculation that if you can't build it for what it's worth, then you can't compete. So we are, like the first new shopping centres due to open in January. We're doing it with Quintain and Adamstown because they're mandated to build retail because they can't build the 5,000 homes unless you build the shopping to go with it. That's the first time we've launched a scheme since 2007. We did 11 of them in 2007. So it just hasn't happened. So you've got 1 million more people. They're worth 600 billion more. The inflation thing is interesting. Disposable income in Ireland has gone up 55% since 2011. Inflation since 2011 is 16%. So we tend, and this came through a lot of the conversations earlier on, we're obviously focusing on today's news cycle and what's happening. We need to take a broader look at these things and go, in reality, prices are still very low compared to where they were 20, 30 years ago. And the fact that the inflation is high in the next...
Except for housing.
Except for housing, yeah. And that's a factor of interest rates, and we're going to see that, as has been referred to earlier on. I think we're going to see quite a few corrections in values in the near term.
Vincent, what's lasting from the pandemic?
I think the change of attitude, well, maybe attitude in the flexible working practice, I think. It's been bubbling along the surface for a few years, really accelerated since COVID. I mean, you've got KPMG now who introduced a 4-day week for their employees. and they're quite happy with it. The productivity is actually better than a 5-day week, which is quite...
Sure, RT, you've been on a 2-day week for years.
But, so I think that's a really important thing, because it affects everything. How people do their spending, where they go to.
Yeah, Thursday night's the new Friday night.
Correct.
And there's particular problems on Monday and Friday for footfall. A lot of pubs have taken away food and an option on Monday and so on. These are, you think, lasting changes?
Absolutely. I think the way... It's like how change evolves. People will respond to it, and there'll be a new equilibrium in the marketplace.
Just interestingly, we talk about retail, talk about offices. What about the hospitality sector? Any opinion? Because it was very badly affected by lockdown. Are any of you involved in the hospitality sector? Either tenant, landlord? I know those words are obnoxious now. Any feelings about hospitality?
Yeah, we'd have a few food and beverage tenants across the portfolio, and they were very challenged during COVID, absolutely, and we did work with them, and thankfully they're out the other side now. And I have to say, if anybody's tried to get a booking for the month of December, good luck to you, because if you didn't have it in the diary months ago, you won't get anywhere. So they've come back really strong. Now, to your point though, Vince, I mean, some of our tenants have come to us and requested that they don't maybe have to open on a Monday, for example, because they would have previously had that in their lease, that they had to trade 7 days a week. And you know what, I can see the sense in that. So again, that's where that flexibility comes in. Shouldn't call ourselves landlords, but anyway. But it's that relationship is really important. But absolutely, they're trading really, really well now, and it's fantastic to see. Now, they are really struggling on the cost side, and you can see every day, obviously the energy costs are really hurting them. Thankfully, there are some obviously government supports coming through on that at the moment, which is great to see, because otherwise we will start losing them again, and I just don't think that's fair. But
all right, finally, I want to ask each of you what your top tip for 2023 is. I mean, if I, as a businessman, was listening to Conall, I would be saying, and I can see with the National Development Plan, 165 billion, I can see the investment side of the economy, B2B, still, there's a lot of money to be spent. But I will be saying, if you're selling cars, holidays, extensions to your house, colour televisions, people might pause before they buy, because they're paying 500 a month extra between mortgage and fuel and the cost of living, and their employers or the government isn't going to give them that money indefinitely. So my watchword would be caution, but maybe I'm 63 and getting more, I've been around the block too long. What is your top tip? Like, in other words, we're now talking about the thing, but are you worried about World War III with Putin? Are you worried about that? What's your biggest, either on the upside or the downside? What's your sense of 2023 for CRE?
Well, I think one of the biggest concerns that hasn't even been touched on yet by the industry in Ireland, but we're going to learn the hard way from global examples, is that we haven't focused on the cybersecurity of all of the technology we're putting through buildings, either new build or retrofit. And if you think about it, we are making buildings responsible for mechanical breathing. We're locking people into them through keyless entry and exit. We're locking down lifts. The reality is, one cyber attack is going to change how we use a building, and we need to start.
So what's the
thinking about
antidote?
that now.
What's the antidote to that?
We don't know.
You need a consultant.
We need to research.
More expense on the club.
No, we need to research. Do you know, genuinely?
No, it's a very good point.
Genuinely, actually, this is one of those times where I'm not going to try to leave you with an insight. I'm genuinely posing the question because it's one that has been coming up a lot for our design and build teams, for their clients, for real estate portfolio owners and operators, and for the proliferation of IoT. I mean, we've talked about ESG. There's all these IoT sensors that tell us all the magic things feeding into the data that we can feed back in terms of insights. Every single one of those that plug into a building are opening a point of vulnerability, and we have no idea how that is going to impact. So actually there's a huge cybersecurity conversation that needs to happen globally, and Ireland is not even at the races.
Okay, Suzie?
Yeah, I'd probably reiterate resilience, and I think resilience into 2023, both at a personal balance sheet level, and that will hopefully then play well into the retail space. But if people take care of their own personal balance sheets, that plays well into the commercial real estate market as well. And then the corporate balance sheets, again, say from our tenants or our occupiers, I think is the word I meant to use now. But I think it's really important that their balance sheets are in good shape and that they're resilient, so that when those dreaded interest rate hikes continue into mid-2023, I think maybe up to around 3% or wherever it's going to go, I think it's really important that the rest of the balance sheet is resilient. And I think, again, from a landlord's perspective, that's what we're looking for, is resilience of our income, which really plays through, and resilience of our tenant base. And I think that's critical into next year as we ride out this uncertainty.
Neil?
I think on a positive note, as you've probably picked up on already, I think this recession is not going to be the same as the last one. They never are the same. The last one was very damaging because we went into it highly indebted, and it took us 5 years for the consumer to come out of that. I think this will rebound much more quickly. So from a retail sphere, I would buy the dip. I think there's a real opportunity there because rents still are not anywhere near where they were in 2007, and yet all the economics are very positive in the longer term. On the downside, I don't think we have priced in the problem that are coming down the line for office buildings that aren't ESG compliant. I think that market has not fully recognised the delta between green and non-green in that sector, and I expect to see some serious repricing in that part of the market next year. And I wouldn't buy into that until that's happened.
Fair point. Vince?
I'd be optimistic about a sea change in the approach to sustainability actually being driven rather than being talked about. There's a lot of talk about it. People need to get on and do it now. That's developers, whether they're changing the source of their materials that they're using, whether it's the methods of modern construction are changing, whether they're doing modular.
That's embodied carbon. We're going to talk about that this afternoon.
Yeah. So I'm saying that this has to happen, and I'm optimistic. There's a momentum there. There's big leadership people from Cairn Homes and Glenveigh on the residential side who are driving that agenda along with the Green Building Council, and that's also the same for commercial buildings. Everybody will have to be sustainable. So I'd be optimistic that the talk will actually change into action and things will actually start to be delivered.
All right, you've been an absolutely excellent panel. My thanks to Vince, Neil, Suzie and Carol. Please show your appreciation.